There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for a free trading education event. Call now.
Good morning, my name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Up 3 days this week, led by financial, tech, and energy. And despite that mini flash crash that we saw yesterday around 110, markets breaking through some key resistance. Definitely a little bit different composure than what we saw on Monday.
Yes, well, last
Coming
week,
into trade.
Right, last week you saw the decline that held the 50-day, so the question was it going to be a feeble bounce off the 50-day, or will it have some potency? So, you come into a new week like we saw on Monday, like, okay, let's wait and see, let's see if the bounce is feeble, if we roll over, if perhaps we go back to the 50-day, or do we start, breaking through some resistance? And we talked about 1565, 1575, all of a sudden,
right,
some of those barriers were broken, which led the way to some traders putting, some positions back on.
What I find really interesting too is, despite that flash crash, you would think that would completely spook the market.
Right.
HFT is not adding liquidity, even earnings season, it hasn't been that stellar, and it's continuing to show some significant strength here.
Well, what it could have done is it could have trapped some more shorts,
right,
thinking, okay, that just jittered confidence, but it happened so quick, and it wasn't like the last flash crash where you were down 1,000 points and it was like a 30-40 minute fiasco, which I was involved in, and it was very scary. This, I was on a stare machine. I saw people starting to tweet about it. By the time I called the office to see what was going on, I was already stopped out of my positions,
right,
and we were right back to where we were. So it was really like a blurb. So that's why I don't think it had as much effect as it did the last time back in May, years ago.
It's just amazing to me how you put so much fundamental and technical homework into your positions and into trading, and something as simple as a Twitter handle getting hacked, that's scary in my mind.
Well, you're talking about AP,
right,
President Obama injured, White House bombs, after we just had the Boston
right,
bombing a week ago. That was true. So there was some footsteps
Twitter
there.
Can almost create a mini flash crash in my mind is something we would have ever thought of 3-5 years ago. It's
right,
amazing.
Well, it is like the new normal, because think about it, also earlier in the week, remember Google, the little fat finger trade, all of a sudden went down $20, and then yesterday was as high as $8.13. So you just have to adjust your plan, maybe be a little bit looser, maybe not have as much size, and just do things differently, because in the market things change and you just have to change with it. So
right,
if you don't stand still, you could always be moving forward, and sometimes it's a bad thing where like I lost a little bit with it, but some guys in my firm bought the dip and saw strong stocks, and then they made some money. So it happens.
Right. So what is it? One man's trash is another man's treasure. Is that what you like to say? Anyway, let's take it to the S&P. Take a look at some levels that we'll be trading today. Yes.
So if you look at the chart here of the S&P, you will see that this was the test of the 50-day back last week. I think it was like Thursday. We had that breakout failure right around here, which led to some selling. Not I guess a whole lot, from 1573 down to 1540. That was what, 30-40 handles. And then from there, the question was what type of bounce? Was it going to be contained by the 8 and 21 day? It wasn't. And then yesterday it really powered through. So with that said, there was some nice reversals, nice red dog micro reversals like we talked about in the financials and some home builders. They didn't go down on bad news. So it was worth putting some stock on. So now here, opening up a little bit, perhaps you could, if you took off, if you put positions on and you don't have a hedge, maybe into this upper resistance, you put a hedge on. If you're flat, you're coming in today and you look that you want to do something tactically. Perhaps if we, open up and go back below 1579, you get some kind of cute short. So this way, then you see maybe some digestion, and then overall, who knows? Within the next month or so, we take out the highs. But overall, we've talked about how on a macro basis, we've been in a very strong trend on a macro sense. If you're like a macro swing versus active swing, there's no reason to even flinch that,
right,
things are just moving along, and I still think that road to 1700 is intact, but we just have to figure out what the timing is there.
Right. Well, like I said before, I think the fact that earnings have not been that great and you're still seeing some strength out there is pretty impressive in my opinion. Moving along to the sector spotlight, we're going to talk about the ag group, which happens to be my favorite space to trade, particularly in Q2 and Q3, because that's where you see that seasonal volatility. Biggest variables we're looking at here are going to be weather and, of course, crop yield. Weather hasn't been that great in the Midwest, so you're going to certainly see a bid for some of the underlyings and, of course, in the stocks. Monsanto, I think, is going to be the relative outperformer, really firing on all cylinders. It's a genetically modified seed company, and if we continue to get poor weather trends, that's where you're really going to need it, because you have to get yield. That's really what we're going to be focusing on.
Right, and if you take a look at the rotation that's happened in the market, it's good to think ahead a little bit, because the ags in the first 2 quarters have not been the place to be. And if you look here at MOO first, just to see how it started the year, it made its highs in January, when a lot of other groups, a lot of other sectors made highs, over the course of the first quarter. So with that, it's been trending lower, went below the 200-day. It did regroup and reclaim the 200-day, which I do think is a short-term positive. So from here, I would say, as far as the overall group, see if this could reclaim the 53, and then at some point, this downtrend comes into play, and that's when it truly will start acting better, if it does. But like you said with Monsanto, you're talking best in breed here, because look where the 200-day is. So as a trader, this would be something I would look at for leadership, because it's above the 50-day, it's acting okay, it's looking to reclaim the 8 and 21-day. So overall in this group, this is one name that I think could help lead and should be in focus.
Well, from an options perspective, what we are looking at is the MOO and the DBA, which is more on the underlying. We also have a couple of trades on Monsanto Mosaic, and what we're trading are time spreads, which kind of lets you play that volatility between Q2 and Q3. We're looking out more towards September, that time frame where you're going long. It's where you're long on the call position. So that's what we're looking to do to sort of hedge ourselves, and then also have that bullish bias towards the end of the year. Speaking of Mosaic, we're going to take a look at that one. Mosaic and Potash, for the most part, tend to trade together. Mosaic I like a little bit better. Lots of cash. You have that Cargill lockup coming off in May, and they're looking to use that money, unlock shareholder value, and continue to grow that business.
Okay, well overall, you look at Mosaic, it's been trapped in a big channel, and at some point it should break above that. So if you're patient and you're waiting, it seems like it's something to be patient and wait for. If you look at this lower channel that's been pretty much, almost 2 years, it's finally in the upper end of that lower channel, or maybe even upper third. So it is acting better, within this big consolidation. So I would say for this to start getting, more active, you should see a move above this 60 area, and then, for it to really become a leader or something that's in motion that a lot of people are going to talk about and get some follow through with, it's going to have to trade above this long-term trend line of about 64. So I would be in perhaps tier 1 or do the type of strategy you're talking about with options, but literally it's going to have to get through this area to get in motion before traders start looking at it again.
Yeah, and from a longer-term perspective, I certainly think 72, 75 is certainly feasible on this name. Take a look at Potash. It doesn't perform quite as well as Mosaic, and there's a key channel that we're looking at here as well.
Yeah, this one, I remember like 2 years ago, this was one of the leaders, and traders were trading it every day, and then they had that whole takeover situation that didn't happen, and since then, sometimes you just got to go get your premium.
Right.
And here, it's been so lethargic, so out of play. Every time somebody raises the name, people are like, oh, all right. But anyway, look at the move it's had. It's just been slowly descending, and there's really not much here. I would say, it's below the 200-day. It's below all the moving averages. I would just kind of keep it on the sideline until this group comes back in play.
Moving along to CF, this is a name that we traded a lot with the T3 guys last year. You could see where there's the shift going into the potash and phosphate names and moving out of the nitrogen names, because nat gas has moved up so significantly, their input cost is moving higher, and that's clearly going to, in fact, affect profits and margins overall.
Yes, and this one, guys haven't really been talking about because it broke uptrends, it lost its momentum, so this has also been something kicked to the curb, so to speak. I know Sperling's tried it a few times for a bounce, but if you look here overall at the chart, from this trend that was intact, that was really strong, it broke, came back, retested, and then continued to the downside. It's below the 200-day, it's below all this stuff, so I guess nat gas really had a big fundamental effect on it. As far as a trade right here, small trade, I guess if this were to get above 180, perhaps you see a move back to the 190 area for a trade, but it's got a ton of resistance in front of it. This has not been the place to be, and I still think it's somewhat to avoid unless you want to try it really short-term tactically here.
And let's wrap it up with AGU. This is another one that's having a pretty tough time as well. Sometimes you get a bid when you have JANA Partners comes in, they're looking to really shake up this company, and AGU just does not want it, and that's why I see a lot of that choppy trading action.
Right. It looks like all these are pretty much in the fence, so you have to have a real thesis to be in it, to watch it, but small, because there's no reason to be in a group that's just been on the decline. We'll see an igniting bar, we'll see some type of setup if it gets better. You look at the chart here, here is that high level area for a stop, and if you didn't get stopped out here, this could have been your retest right there that didn't hold. It broke below, couldn't get back above, and then if you look at the same trend, CF broke, that happened right here where it broke it, came back, retested, and look where it is now. It's well below every moving average. So to me, I think guys are having more opportunities short here versus long. I guess if you want to take a closer look here, this is bigger support here right around 90, but ton of resistance. I don't think it's really worth much time.
All right, we are going to take a quick commercial, and when we come back, we dive into the trenches.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Back to the morning call, we're going to dive into the trenches and take a look at the energy space where we've seen some rotation come back into. We saw a big move in oil last week, and quite honestly, I spoke with Dan Dicker of Real Money Pro, who you work with as well, and he's our energy resident expert, and he said that move really wasn't that ridiculous. It is seasonal. The good thing for it is you have seen gas prices come in a bit, so it's been great for the consumer.
Right.
So that's something that we'll want to focus on. Let's take a look at ConocoPhillips. Speaking of the consumer, this is a great dividend name if you're looking for a nice long-term position. In fact, it's something that Stephanie and Kramer have recently added to the portfolio.
Okay, well, they seem to like to buy it on the dip, and this one just came into a longer term trend line that I'm looking at. So to buy the dip is one thing, that's your tier one, so to speak, but it's going to have to do some work in order to get some motion, so to speak. If you look here at the chart, this is your trend line. It's been intact for a long time, and I know Stephanie and Kramer like to buy on the trend line, which is great, because if it holds it, you get a nice buy the dip, and then if it starts to go, you'll probably see it get above 60. You take a closer look here, it's a dip below the 200-day, which sometimes is a sell signal, but if it reclaims it within 2-3 days, sometimes a little bit longer, perhaps it's a bit of a washout. So if you're going to be long this thing, make sure you're long it versus this 56, what is this, 56.40. And if you did buy it there, see if it could come back and come into this upper range, penetrate through some of these moving averages, and at some point, perhaps it takes out this downtrend. I know for traders, this has been a very frustrating spot to be as an investor that could buy the dip into a trend line. If you have a tier one, I would stick with tier one until you see this group start acting better.
Moving along to Valero, ticker VLO. This one is finally starting to act better, had some nice trading over the past 4 days. And again, that's where you see some of that smart money coming in and taking advantage of that drop that we saw last week.
Yes, well, at this point, I'm looking at this name, and it looks a little bit better than some of the other ones. And I know every time the refiners are going, everyone's like, oh, let's take a look at Valero, Schlumberger, or Halliburton. And I know they're all different, and they all still are frustrating.
Right.
And this one, if you look at the actual chart, this was your gap up, had some decent action. And then if you look here, look at this potent, engulfing bar that took out this ascending channel, which has led to lower prices. So now it's just bounced back up to resistance. It's going to have to hold higher, in order to do anything worthwhile, because at this point it looks like a bounce to retest resistance, and if at 42 it fails, maybe see if it could hold higher and then ultimately maybe take that out for better action. But right now, this is still locked in a pretty significant downtrend. But actually, you could draw a little descending channel here. So for the first time, if it pulls in, it's got to hold higher and then break above it for this to get a little bit more interesting. But sometimes money rotates, and no better time than the spring.
Right. Let's take a look at a new name that we haven't focused on much. Noble Energy, ticker NBL. This one breaking below the 100 DMA, but it held at that 105 area.
Yes, this one doesn't look that different than some of these in the group. They broke down and bounced back, and now the question is it a retest? Doing a quick little line chart here, or just some kind of trend. It looked like it was trying to go here, and then boom, engulfed this entire range and then had follow through to the downside through a pretty big trend line, and then it did caught a bid above the 200-day, and it did have a decent day yesterday. But I'd rather see you wait a little bit, because in this area you're just kind of retesting this broken trend line, and that might be a spot to sell versus buy. But at least you'll see a rubber match area to measure. And
let's wrap it up with Chesapeake, another one too, where it saw touching some key levels on that day when we saw the big drop on Wednesday.
Yep, and this is below the 200-day. Some of these are above it, so this needs to either reclaim it or it'll be rejected by it. So again, this group that's trying to show that it's more than just a bounce has a lot to prove. This was when it broke above a really nice lower channel and gave you a move, and then you had this gap up that failed, and then it took it back, and then wow, look at this excitement here based on this. So at this point, it looks like it's trying to regroup again. If it were to get above this, just say 19, you do have a move back to 20 and change, and then you have some resistance at this point. You have to be a fan of this group and know it very well, I think, to be involved. At this point, here's your lower pivot, there's your resistance, and I would just keep it kind of tight there too.
Moving along to quick hits for quick cash, we're going to take a look at Apple. It reported an 18% loss in earnings, although it did beat the street. The story here was the buyback and the dividend, but what I'm concerned about is forward-looking guidance going into Q3, and I think that margin compression and market share is really going to be a concern here.
Right, and you're not going to see the growth numbers that you used to see.
Right.
But the question was 700 down to below 400 enough? Yesterday you had the numbers come out, it gapped up. We were trading it after hours. It gapped above 420, and then I think some of us caught a nice trade to 429, and then we said if it doesn't hold 425, we're done. And that's when I stopped trading it after hours. And then some guys actually, when it didn't hold 419, got short. I had to run out. The Knicks game was last night. Anyway, with that said, some people took option strategies into the earnings. I did a call spread. If you guys remember, I bought a little bit on Tuesday when Apple was up $8. I'm like, I'm not adding to my options here. I'm gonna sell, the 430 strike to kind of fund it because of the gains. It was just some type of small risk, and it's probably gonna be, almost a zero. So with that said, you have to always know that with options, whatever you put in there could be a zero. If you did a straight option buy on the call side or the put side, you're probably going to lose money. It's going to be a dealer show today, so to speak. And overall for the stock, at this point, you had this huge move to the downside. Every now and then there was a tradable bounce for some money. This was the first one that came up, didn't show commitment, failed. Here was the start of 2013. Will it be different? Went up, couldn't hold the gap, failed. And then here we are. This was the last time I tried to break this long-standing downtrend. We had two good call spreads, nice trade, and then it failed. And then here we are. Look at it where it is. So at this point, you have 419 as resistance. I think it's down a few bucks this morning. You have key support here at 385. I think it's just going to be a churny, choppy trade. And then at some point, it does feel like, perhaps, you might get some kind of capitulation low into this support all the way, down here, which is around 360. But at this point, I think most traders are going to probably trade it a little bit today, but avoid it. And thank goodness, Jill, we're used to the fact that, Apple has become a lethargic, choppy trade with not a lot of opportunity. Sometimes you get a nice meaty short, sometimes a small intraday bounce, but I think that it's just going to be something that traders are going to continue to trade from time to time, but not be the vehicle it was, for the prior years.
Well, that's what we did. We put on a weekly time spread at the 405 strike. We shorted the April 26th weekly, bought the May 3rd. We went long on that one. 405 is going to be the number that we're looking at, and if it gets to that area somewhat today, we're going to take that off. We're able to get it on for about $1.05, and that's relatively cheap. I think what long-term investors are going to look for here, if we're shifting out of the growth and profit numbers that we've seen with this company, if it's no longer that growthy company, what are they going to do with all that cash to unlock shareholder value? That's really what's going to be key here. Moving along to IBM, this one took a beating after earnings. I love this name. It's my favorite core portfolio holding. We saw a nice move in it yesterday, and I would still continue to accumulate here.
Well, it's still above the 185 level. It still has a huge hole in this chart. I think you could actively trade it. There are two ways to do it. If you weren't in it and you want it as a macro, buy the dip, which it has worked for IBM in the last 4 or 5 years. Do it small if you're a trader. You had rewarded twice this week already. If you take a look at the chart, first time was, remember, it opened up a little bit on, I think, Monday. It traded below the earnings low, and then yesterday gapped up and was decent. Overall, though, it's going to take time. You have a huge hole here, so this could be your new range, so to speak. to just trade it actively on a small time frame, or you buy a little bit versus low now, okay, and then just let it sit. And then after a period of time, if it decides to consolidate and do decent, maybe you get a trade into this gap. But the longer this huge gap stays open with people not buying the dip here, the more prone it is to, if you take the weekly chart and look at it, where this 185 comes into jeopardy. So this is a huge wide range bar. We haven't seen this type of down move in the course of a while here. So I would just respect that as long as it stays below the bottom third of it.
Right, well, we saw it happen last quarter, and it certainly totally came back. I mean, you saw that in the overall market in the past 3-5 years. That's what we looked at with the chart on Monday. Moving along to Google, this is another one that's way back above its key moving averages.
Yeah, this one we saw a mini flash crash. Got some people out. I think even like me, I was looking at that day after the follow through, and I'm like, okay. And then that happened, and it just, I guess it's a function of the market now. When you have all these fake bids and offers because of high frequency and algos, and they just pull back, whatever. I'm not going to get into that.
But they provide liquidity. Don't forget.
Right, when you probably don't need it, but when you need it, it's like they're out the window. So you go here and you'll see, this is the descending channel in Google, okay? And this was your earnings day where it ignited. Here was that little flash crash, but wound up closing well. I talked about 803 as a potential extra buy, and it did get as high as 815. So at this point, some more sideways action. I don't think it's going to run away. I don't think high beta names are in runaway mode besides Netflix and LinkedIn. But overall, this is probably one of the better acting names. It's hard. It's an $800 and some stock, and these all have problems up here because everyone starts talking how rich they are, but meanwhile they're really not. It's just a high price stock, and there's not that many people out there that feel comfortable owning them, staying with them, at these levels. So I'd like for them to do a split before they get in jeopardy of that high price itis.
Well, it's really key that you bring that up because there's a big difference between being high price, capital intensive versus expensive, and on a relative basis, this one's really cheap. And I'm glad that we had that short Apple long Google call earlier in Q4 of 2012. Let's wrap it up with Coach. What a surprise with earnings. And the Asian numbers came in good, which we didn't expect on Monday.
And just goes to show you, into earnings is always risk.
Yeah.
So if you thought, oh, I could just be short this, it's been acting bad, sometimes it's priced in and there's a surprise, or same way, you're like, okay, I want to buy it. Whatever the thesis was, it was hard to predict.
Right.
But what could you do now is the question, and how can you use the gap to your potential? So here, it did open up. It didn't close near the highs. I would say at this point, the longer it stays above and protects this opening gap, the more bullish people can get, because when it does take out the high of this opening gap of earnings day, then people can look to trade to fill the majority of this down open. Because if you look in just where it has been and where it is, it's still very far in the gutter here. So at this point, this could ignite a new move as long as they protect this gap. So gaps are important, especially pro gaps. And if it comes in and just fills it, over the course of the next 2 weeks, you'll know that this excitement was unwarranted. But if it could hold in there, I think that it'll stay on Raiders' attention. All
right, well, this will certainly be another busy day today. In fact, the remaining of the week and next week, too, we'll have a lot on the earnings calendar. Have a great week, everybody. It's been great being back with Scott. Catch Scott again at the end of the day, Real Money Pro, Options Profits, and T3Live.com.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.